We look at the data that has just come in on major U.S. cities, up more than 5% in June compared to a year ago. This is from the Shiller index that came out this morning. Robert Schiller is with us now. And what is the takeaway, Dr. Shiller, from this piece of information? And there are some other questions I think that'd be interesting to talk to you about housing in general right now. But what's the takeaway from today's report?
Well, we've been on about a 5% trend for a couple of years. There was a 10% trend we had between 2012 and 2014. The market has cooled. It's still right on this 5% level, and maybe, seasonally adjusted, though it's low. Maybe it's weakening, but not a whole lot. I still think home prices are likely to go up.
Okay, likely to go up, and it's kind of where we've been for a while. Can I ask you about segments of the market before we even get into areas of the country, which you guys obviously look at very closely? How are things on the high end for homes right now?
Oh, you mean, well, we have a top-tier index. We haven't released that as of today.
Okay. So
but I can talk about it in a different sense.
Yeah, just curious about it. But go ahead. Then, yeah.
Some cities, San Francisco, is a top-tier city, right?
Yeah.
Expensive real estate. They've been going through an enormous boom until recently. Now they're on the weak side. San Diego is a weak city at the moment.
Yeah, those are always on the high price, very, very high income areas and the highest areas for housing, along with New York. But even out there, it's definitely in San Francisco, and I think San Diego as well, higher than where we are, right, in the New York area. So you're saying things are kind of sitting there a little bit.
Well, these cities have gone, they are volatile cities. They go through booms, and then they go through weak periods and bust as well. So that, they've gotten to be expensive cities, but it hasn't been monotonic.
Okay.
And they're in a weakening phase now. I think they've gotten kind of high, and maybe they won't perform as well as investments in next year or so.
Fair enough. So what's the most important thing people should be watching? And just from a practical sense, somebody's thinking about, and I'm thinking about putting my home on the market, or maybe I'll wait till the spring and put it on the market now. Is it the Federal Reserve and where they go with interest rates, or what are the most important factors for people to watch right now?
Well, we're living in a very funny economy with these near zero interest rates. People are talking about secular stagnation. We don't have much experience with this kind of economy. The last time we had it, I hate to say it, was in the Great Depression.
Jeez.
And even then it wasn't, the interest rates weren't so...
You're not saying, or not worried about something like that happening again, or...
I didn't mean to bring up the
right,
D
well,
word.
Bob, you come out, so the last time we had it was the Great Depression. It does, I feel, almost an obligation to say we're not heading into a depression, are we?
It's that fear that's holding the economy back, why GDP growth isn't better. People are not... I know the confidence numbers came out this morning with a big jump up, but I don't know if that's the final measure. I think people are that's why capital expenditures are not high. Even though interest rates are very low, this should be a great opportunity to borrow and invest, but it's not happening. And so there is some holdback, and in fact, part of the housing boom is due to people wanting to invest in something.
Right. The psychology of it, as you've always talked about, is very important. Bob Schiller, as always, thank you, and hopefully there's no depression in our future, but there is a lot of fear. You're right about that. No, I know. I'm just kidding around with you. It's always good to talk to you.